A speculative attack is unfolding right now, but it's not happening in the streets, it's happening on balance sheets. And the weapon of choice is Bitcoin. Over a decade ago, Pierre Richard wrote about this in an article titled Speculative Attack. He argued that Bitcoin wouldn't go mainstream through consumer adoption or regulatory clarity, it would be forced into the mainstream by economic gravity. As fiat currencies weaken, people will turn to stronger money, not because they want to, but because they have to. That's what a speculative attack is. It's when rational actors borrow a weak currency, one that's being inflated away, and use the proceeds to buy a stronger asset, expecting that asset to outperform the debt. You're shorting the weak and going long the strong. Essentially, it's the carry trade. It happens today, and in this case, the weak currency is the US dollar, and the strong asset is Bitcoin. This strategy is not new. In the 1990s, speculative attacks crushed multiple national currencies. Traders borrowed in local currency, bought dollars, and waited for the collapse. Central banks had two choices: raise interest rates to crippling levels or devalue their currency. And either way, confidence was lost and capital fled. And today, the exact same thing is happening all over the globe, the most popular carry trade being the Japanese yen carry trade. Today, the same mechanics are playing out again, only this time the dollar is the target and Bitcoin is the exit. Let's look at the macro environment. The US government is running a $1.9 trillion annual deficit. That means they issue over $6 billion in new debt every single day. National debt just crossed $37 trillion, and interest payments alone are pushing toward $1 trillion per year, a figure that's larger than the entire US military budget. The currency is backed by an obligation to print more of it, and yet savers are still holding cash, wondering why their purchasing power keeps slipping away. Over the last 4 years, the dollar has lost over 20% of its purchasing power. And that's just CPI. Try buying a home or raising a family or running a business. The real world erosion is much worse. So what are rational actors doing? They're executing a carry trade, borrowing fiat at 4%, 6%, 10% interest, and in the cases of major corporations running a Bitcoin Treasury strategy, sometimes 0% interest, and using it to buy Bitcoin, an asset that is historically compounded at a very high rate, currently at a 30% 4-year compound annual growth rate, with a fixed supply and $2 trillion of global liquidity. It's not speculative, that's mathematically sound, and this is where we are right now. Bitcoin Treasury companies are already running this playbook. They're not bubbles, they're not hype cycles, they're the newest cohort of participants in a global speculative attack on fiat. Some are issuing corporate debt, others are raising equity, some are simply using operating cash flow, but they're all doing the same thing, public and private. They're holding fiat liabilities, accumulating Bitcoin assets, and letting time and monetary inflation do the rest. They're flipping the corporate treasury model upside down. Instead of holding dollars and hoping that they hold value, they're holding Bitcoin and letting the dollar degrade. And critics still don't get it. They hand-wring about volatility and gap accounting and ESG and fiduciary duty and misleading marketing and everything else. But that misses the entire point. Fiduciary duty is about preserving value. And when your base currency is melting, preserving value means leaving fiat. These companies are not the end game. They're just the tip of the spear. They're front-running a monetary transition where capital, slowly at first and then all at once, begins to move out of a structurally broken fiat system and into a structurally sound one. Because eventually this speculative attack spreads like a contagion. It moves beyond corporate treasuries, to pensions, to sovereign wealth funds, to individuals and countries where fiat collapse is already underway. And once enough capital moves into Bitcoin, not just for price speculation, but as a store of value, the reflexive loop kicks in. That's Bitcoin strengthens, fiat weakens, more capital exits fiat, and the attack accelerates. Until one day fiat money doesn't just weaken, it becomes obsolete. Your money is no good here. Bitcoin isn't being adopted, it's being forced into the system through cold, hard incentives. This is what hyper-Bitcoinization looks like in its earliest form, and the speculative attack has already begun. That's all for today's video. Thank you so much for watching. If you enjoyed, make sure to reshare and, of course, like so more people see it. And, of course, check out Horizon. Horizon lets you stack Bitcoin using your home equity without extra monthly payments or interest charges. You can check that out at joinhorizon.com or by scanning the QR code right there. That's all for today's video. Thank you so much for watching. I'll talk to you soon.